All right, so welcome to day 2 of the Trading for Dummies Bootcamp. Today, we're going to be going over all the foundational information that you need to know, from understanding what futures contracts are, understanding trading sessions, really all of the things that build the foundation for everything else that we're going to go over the next 2 weeks or so. This is extremely important, so make sure all the information that we go over today, you guys take it, you write it down, and you remember it. Because if you don't have the foundational things, everything else that we teach, it's not going to make any sense at all. But without further ado, let's get into it. All right, so first things first, we need to understand that there are multiple different markets that we can trade in. There's the futures market, there's the Forex market, the stock market, the options market, and the crypto market. Essentially, these are all just different types of trading that we can do. You've probably heard of crypto, you've probably heard of stock, you've probably heard of most of these, honestly, and they all are very similar, especially due to the fact that once you learn one, it's very easy to learn the other. Like, for instance, I started off when I first started off trading crypto and I started trading Forex. But then about 5 years in or 6 years in, I transitioned to trading futures mainly. And doing that transition, it was extremely smooth. It's not like I had to learn a whole bunch of new things. It's just some terminology that's just slightly different. And I'm saying that to say that in this video, we're mostly going to go over futures because that's what I trade most of the time. It's also what I think is the easiest kind of market for new traders to get into and to learn. And then also the skills that you learn trading futures is so easy to integrate into any of these other fields. So we're going to be talking about futures mainly inside of this video. But like I said, you could take that knowledge and go into the Forex market, options market, crypto, stock market, whatever it is. And I've successfully killed every single one of these markets. All right, so as I mentioned, we're mainly going to be talking about futures. So I did want to go over the top 4 main things that most people trade. Now you'll hear me say tickers or instruments. That's simply just the underlying asset that we are trading. But essentially, those are just all tickers. Those are the symbols that we're trading. And here you're going to see contract, which is simply just the full name for all these things. So like NQ is the NASDAQ, ES is the S&P 500, YM is the Dow Jones, GC is gold. These are just the ticker symbols for it, or the abbreviations or smaller versions of it. Now you'll see over here, we have margin. This shows you how much money you need inside of your account to open up one contract. We're going to go over contracts, what that means, what that looks like later on in this video, but just keep this handy and keep this in mind. If you want to open up one NQ contract, you need $1,000 in your account. But you'll see here we have these MNQs, or these micro versions of the original ones. The micro versions are essentially the same thing as the regular ones. They're just cheaper, right? And you'll understand this a little bit later on, but each of these tickers, you'll see we have a micro version of it. So NQ, we have MNQ. ES, there's MES. YM, there's MYM. GC, there's MGC. And you choose what you want to trade, whether the original contract or the micro version. Depending on your skill level, I suggest for most beginners to start on micros of whatever they want to trade, but not just your skill level, also how much you want to risk per trade and how much you have inside of your trading account. But that's what margin is. Then you'll see here tick size. Think of this as the increments of which each of these move in. So like NQ isn't going to go from $100 to $101 to $102. It's going to go from 100 to 100.25 to 100.5 to 100.75 to 101, right? That's the increments that it moves. And it does the same thing with ES here. You see it moves in 0.25 increments. YM is going to move in 1 increments, so it will go from like 100 to 101 to 102 to 103. And then GC will move in 0.1 increments, so it'll go from 100 to 100.1 to 100.2 to 100.3. That is the tick size is the increments of which each price of these tickers moves in. Now you'll see here tick value. This is simply showing you that for every tick movement, that's worth $5. If NQ moves from 100 to 100.5, it moved 2 ticks, right? And each tick value is worth $5. So if it moved 2 ticks, it moved $10. If you open up a buy and it went in profit 2 ticks, you'd be up $10, right? Now you'll see on MNQ the same thing. If it went up 2 ticks, instead of it being $5 per tick value, it's 50 cents per tick value. So you'd be up $1 if it moved 2 ticks. Now ES, you'll see is different. Even though the tick size is the same, the tick value is different. So if ES moved from 100 to 100.75, it moved 3 ticks, right? And let's say you bought and it moved 3 ticks. You'd be up
$12.50 times 3, 37.50. You'd be up $37.50 if it moved 3 ticks. That was quick maths. Or was it? I don't know. But you'll see here on MES, each tick value is 1.25. On YM, each tick movement is worth $5. Each tick movement on MYM is 50 cents. And gold, each tick movement is worth $10. And each tick movement on MGC or micro gold is worth $1. So this is a great chart for you to keep in mind, because later on we're going to show you how to manage your risk and things like that. And this is great for you to have to be able to see all that right in front of you. All right, so now that we understand futures contracts, there's something else very important that you need to understand, and that is trading sessions. As you'll see here, there's really 3 main trading sessions. It's the London session, there's the New York session, and there's the Tokyo session. Now I put here exactly what times those sessions are from, but first you have to understand why we have these trading sessions. So essentially, we as day traders or retail traders, we don't really move the markets. No matter if you open up a trade with $10,000, $100,000, even $1 million, you're not moving the price of anything that you're trading most of the time, right? Unless you're trading like some super, super small cryptocurrency, which most of us are really not. If you're trading any of the tickers we just talked about, NQES, YM, GC, no matter how much of your own money, unless you have billions of dollars, you're not moving the market. The banks are moving the market. And there's different sessions depending on which banks are kind of in control or which banks are actually working. Think of it the same way of like a regular 9 to 5. If you go into your bank right now,